So whenever the government administration comes out with this kind of information, what we normally hear from the general public is, if inflation has been declining consistently for the past 6 months as we tracked, why are the prices of goods and services still high? Continuously, we've answered this question about inflation, not necessarily meaning that prices, if inflation is declining, doesn't necessarily mean prices of goods and services are going to reduce by the same margin, essentially meaning that the rate at which prices are increasing has just slowed down in the bit, as we are seeing. But it's instructive to also put out the point that, take a look at this, and we're going to put it on the screen. If you go back up to at least the year 2021, what we are seeing right now is the inflation rate that we saw sometime in December 2021. And this was before the period of the real impact of the COVID and then also the DDEP, as we saw, that threw all the fiscals off gear. We went as high as 54.1% in December 2022 when it comes to inflation, and we've been trending downwards since. And now we're talking about 13.7. The last time we got this low when it comes to our inflation rate was sometime in December 2021. And we're seeing that play out in June 2025. Looking good, obviously. But then again, for you who is watching, the only way this is going to make sense to you is how it translates into the reduction in the cost of living. Joe Jackson is Dalex Finance CEO and a financial analyst is joining us. Mr. Jackson, has it gotten to the point that maybe beyond what the media does in trying to explain the real impact of inflation on our lives, maybe the Ghana Fiscal Service, after putting out their statistics as to how inflation is declining, could also add the real impact so that people would not have high expectations and continue to ask questions about price of goods and services still being high, even though inflation is declining?
Listen, the statistical service is the statistical service, and they will speak in their jargon, and there's nothing much we can do about it. It's important for you and I to communicate to the public what inflation really means. Inflation refers to the rate of increase. So instead of inflation going up with speed, it is now rising slowly. Rising slowly. But it is still rising. And it's important for everyone to understand that, hey, what this signals is slower price increases, but not lower prices per se. Not necessarily lower prices. And in fact, let's even say that the year, an item that you bought for 100 cedis, the beginning of the year 2025, and they said inflation at the end of the year ended at, let's say, 10%. Just means that by the end of the year, the same item will cost you 110%. And that's so important for everyone to understand. It's not about prices coming down. It's about the rate of increase going slower rather than what it was going before, rising like a rocket. In a sense, yes, maybe we should ask the what do you call it? The statistical service to explain it better. But really, this is an issue that's come up over and over again. Is it a good sign? Excellent sign. Fantastic. It just means that we are slowly leaving the bad old years of 2022, 2023 behind, where inflation went as high as 50%, dropped to 30-something, and now we're getting to a point of inflation where it's still high, but it can be managed. So remember that at this point, I'll say to you that price levels are still high. Incomes haven't matched to price levels. But the rate at which the prices are increasing, where prices used to increase every month, every week, no, we've gone past that. And that's a good sign. It also signals an easing of the daily budget pressures each and every family, each and every person is facing. But once again, the other thing is this. This easing will be felt differently across the regions and across income classes. For example, if you're in a rural area, you may see a quicker easing of food prices. But in an urban area, you may see that because of the transport bottlenecks, because transportation is still, and the cost of fuel is still going up, and the roads are still nowhere near as good as they should be, that easing of that budget pressure will be uneven. But there is an easing of budget pressure. Nobody be confused. This is nowhere near as bad as it used to be. But the effect will be different depending on where you sit, in which region, whether it's a rural area or an urban area. Another good thing is that potentially rates will drop.
Unfortunately, we lost Joe Jackson there. And in fact, you made the point quite clearly, Mr. Jackson, about the real effect of all of this in the coming months. And this is a conversation we're going to continue to have as well, especially how this should influence the Monetary Policy Committee's decision on the policy rate as well, which has been stayed, for a while now. And the businesses, private sector are expecting that this downward trend of the inflation rate would influence policy rate also going down. That will also impact on cost of credit, and the trickle-down effect will be felt at least in the economy as we are seeing it. But thank